Today's topic will be on rebalancing of the economy, a review of 10 years of BCI, or Business Conditions Index that we have run since 2011. Since September 2011. So this is exactly 10 years that in the making. So first of all, let's take a look of the Business Conditions Index. As you can see, it has quite a bit of volatility over the last 10 years. So it's very sensitive to business conditions in China because of the sample that we have. They are basically our own alumni and some of CKGSB. So let me introduce to you some of the methodology and the sample that we have gone through. First of all, the universe that we're trying to survey is not the whole economy in China, but rather the universe is the CKGSB's alumni and network. And most of our alumni networks are owner-operators of medium and small-size businesses, and sometimes their businesses can be quite large. And so they are. Yesterday, I visited one of our alumni's company. They have 5,000 employees, and we consider them to be a sort of a hidden champions in China, and they are really large, and they do very well in a very small area, in a very finely defined industry segment. So the sample we have usually is 400-ish, and increasingly over time, we're moving kind of towards into the 500, 600 range right now. Survey frequency is monthly, and we do this usually by sending our alumni who are on the WeChat network, and we also send them emails and as a way to remind them to fill in our surveys. And the index method, as I mentioned, is a diffusing index. So typically the survey asks questions like this: do you expect sales to increase, stay unchanged, or decrease? So it's usually asked for something that's whether it is improving or is unchanged or is deteriorating. So the index is really taking the percentage of people who report, or firms who report improvements, minus a percentage of firms who report a deterioration, and take that number and multiply it by 0.5 and plus 0.5. And so in general, if the index is 50, so it means that the percentage improving and percentage deteriorating is about equal. So we're looking at this maybe the baseline. And if it's above 50, then overall things are improving, and it's below 50, the overall things are deteriorating. And so this is very much similar to the PMI index. So let's take a look of what happened in the last 10 years. The first thing we notice is a sharp reduction starting in 2020, in February, March 2020. So that's the impact of COVID-19. And then as China rebounded nicely from the COVID-19 pandemic, the economy recovered very nicely over roughly from February 2020 up to today. And then the economy began to soften, I think, about as China moving into the summer. Right? As we move into the summer, the Chinese economy is getting moving a little, the growth rate is moving down a little bit, and we can see this in the data. I think the deterioration in the profitability, and I think is more kind of alarming, and that's indicate that perhaps some macroeconomic policy change ought to be implemented at the moment. And I think that's exactly what we see in the policymakers' action at the moment. But the other thing, I think, as we look at the data, I think there are, in general, more volatility than we see in perhaps other data series that we have available. And I think that's part of the reason part of the reason for this has to do with our sample, and our sample are basically the cream of the top private businesses in China, and they are very sensitive to policies. And in general, when the economy is growing, and they grow faster, and when the economy is getting some soft landing, and they usually contract more. So these are typically we see sort of the frontline firms in China. And so this gives us a much more advanced look into what's next in the economy. And so I think in particular, what's interesting is here, right? When we look at what's happening in 2018, and we do see a sharp reduction in both sales and profits. In general, we also see a reduction in sales and profits around mid and 2012, and then little soft patches between 2014 and 2015. And so one of the things I'd like to highlight is that many of these are related to policy, in particularly with macroeconomic as well as financial policies the Chinese regulators have been tinkering in the last 10 years. And so one of the background paper which Ara has been mentioning, and in which I give a overview of how the changes have affected the Chinese economy over the last years, and perhaps last 20 years. But I would like to focus in my talk primarily on our index and see how those changes have affected our index performance. So one thing to realize, and to realize the 2018, the sharp reduction. And so another way to look at this reduction is by looking at two more indexes that we have, sub-indexes. And here we see one of the blue line indicates the financing conditions, and the red line are the inventory conditions. In general, these two indexes are different from the sales and profits. The sales and profits above 50, but these indexes are usually below 50. So indicating that keeping inventories under control and having financing conditions that are so satisfactory, usually tough for these medium and small firms in China. In general, financings are usually difficult for small firms, as you can imagine, that they are small, and as a result, they are more risky. But on top of that, in China, I think, and most of these firms are privately owned, and when state-owned enterprises are also in the mix, the private businesses are usually at a less on the less preferred level, and from the bank's perspective, because usually we expect that state-owned firms have some sort of a government implicit guarantee, and the private business may not have that, and so there's always an additional difficulty for private firms to get financing. But what's really unusual is this sharp reduction in financing conditions in 2018. And so, and also a nice recovery. So what's going on? And one of the things, and to look at this is in fact to understand how and why and China have to do this, right? One of the things is to look at this. This shows the China's financing, the breakdown of social financing, which include not only the typical bank loans, which are in these bar charts in terms, they are the blue line, which are the light blue, which are the RMB loans issued by the banks. What's interesting is that if you take a look at earlier years, that the bank loans accounts for roughly 50% of the total financing. And which in sharp contrast with recent years, where the bank loans begin to play a much bigger role in financing. And so in general, we economists think that the difference between the total financing and the bank loans are largely explained by shadow banking activities in China. So one of the worries that regulators have is going into 2012, when the new government, when the Xi Jinping, the Keqiang government came into power, one of the worry was how large these less regulated shadow banking sectors is going to be playing out in the Chinese economy. And that's one of the things I think one of the regulators are a little worried about the systemic risk that these financial developments may bring. And we can see over the years, there has been movements towards reducing reliance of social financing on the shadow banking sectors. And that movement and the rectification actions were at its peak in 2018. Let's take a look at some of the changes. So starting in 2017, the CBRC launched regulatory actions to rectify the 3 violations and the 3 arbitrages and 4 improprieties. And see, these are sort of typical the Chinese way to describe a policy change, and usually come with a number and actions and following that. And when those actions were taken, and usually there was a review at the end of the year, and during the end of year review, and I think the regulators were pretty satisfied with it. And part of the things you can see the growth rate of the bank wealth management products, which were obviously part of the shadow banking activity, slowed down, and that's exactly what's intended. So by October 2017, Zhou Xiaochuan was governor of the People's Bank of China, and said that the Financial Stability Development Committee, which is a new committee formed just a few months ago, will focus on 4 areas in the future. Focus on shadow banking, asset management industry, internet finance, as well as financial holding companies. And so you can see that because of the 2017 rectification actions were quite effective. It didn't seem to cause a lot of economic slowdown, and therefore you would expect that the policymakers were thinking that next year, 2018, they're going to take more actions. And indeed, they took more actions, and also with a new team of regulators and came in, right? So this new team came in that with Liu He as the chairman of the committee, and Guo Suqing and Yi Gang, represents both the CBIRC as well as the central bank, and begin to take these rectification actions into full play. And so we saw, and after that, I think it's going to be a sharp change. And that's exactly what we see in 2018 when the index reached the bottom. But that's really causing quite a bit of a problem for small and medium-sized businesses in China, partly because many of the medium-sized businesses in China uses short-term financing to finance long-term investments. And when the short-term finance, when they need to be refinanced, but when the government is doing rectification actions, they couldn't. So many of the firms are facing severe liquidity shock or liquidity crisis at the time. And so that causes significant changes in the business conditions that we see in our data. Luckily, the government took notice of this, and some actions were taken quickly to revive the economy. We can see that November 1st, 2018, Xi Jinping hosted a meeting with private business people in which and he promised that actions would be forthcoming to ease the financing conditions for private businesses, as well as guarantee private business people's their livelihood, as well as their the value, as well as their property. And so one of those things that has a large impact, and we can see after the Xi Jinping's talk, the financing conditions improved sharply, and and things seem to be going back to normal after that. But that's really what's interesting. That the main thing that occurred was that because the regulators had made a crackdown on the shadow banking, and it also offered to make Chinese state-owned banks and other banks and to increase lending to small and medium-sized businesses. And by giving them incentives and by using administrative actions on them and so on and so forth. And so this is really something that, and we think the regulators and the Chinese policymakers has took some extra steps to make sure that when shadow banking activities, which private firms rely on heavily, were shut down, and there were alternatives available. And I think one of the things which came out and to be quite nicely is that, and China has the whole 2019 and to put the system in order. And once the system was in order, and China was facing another crisis, which was the COVID-19 pandemic. And when the pandemic hit, the system was in order. And as a result, the Chinese economy was doing quite nicely. And we see the financial conditions did not deteriorate sharply during the pandemic. In fact, we see for many small and medium-sized businesses, the finance conditions were in fact improving during the pandemic period. And so thanks a lot to these extraordinary actions were taken by the regulators in China. One of the other things that our data is also not just looking at the cycles, the short-term cycles, but also looking into long-term issues the firms may be facing. One of the long-term issues the firm may be facing is that in China, the costs are rising quite rapidly over the years. And I think one of the things perhaps has to do with the fact that the exchange rate should have appreciated perhaps a little more, but didn't, and that forcing the inflation as well as cost inflation to ramp up. And pandemic was, of course, we saw the cost going down. But what's really interesting is that as the cost was going up, and many of the firms were unable to pass down the cost increase into price increase. And so that's creating the condition where many of the firms are now complaining that it is getting a little more difficult to do business in China compared with a few years back. And so those are things that I think the policymakers will have to take notice on this. And so here's the cost, and that's next page, we're going to look at the price. So costs were rising quickly, but the price for many firms were falling or were staying roughly the same. And after the pandemic, we do see the price increase gradually, and they were worried about inflation. But recently, we do see softening of the price increase. And so I think right now, our main concern in China remains to be how to keep the economy growing at the moment. One thing that once the regulations are in place, and we don't have to worry about too much about growth, because the Chinese business people are quite enterprising. One thing to take a look is this investment and hiring index. And this basically asks our alumni, are you intending to hire more people and investing more? And we do see a much elevated hiring and investing in so motivations in here. And then people are many of our private businesses are very eager to expand their business. We only see during the pandemic where these index were quite low, but as soon as the Chinese economy recovered, as soon as the economy began to open up, and after the lockdown and the economy was improving, and so do investments and hiring. So we do see these going forward very nicely. And so we're not too worried that the business is not investing or not hiring. And I think that's something that is very comforting to both us as an academic and as well as the policymakers. So in general, and as I mentioned earlier, our index isn't representative of the whole China, but it really represents the cream of the top in China, right? So our index is really the marginal index, and which I think is quite appropriate, and to look into future and to perhaps look into future a little earlier than other index and data series we have. One thing I'd like to focus on: why did China have to rein in the shadow banking? Part of it has to do with, in the past 20 years, a large amount of foreign capital has been flowing into China, and partly to take advantage of what I call the arbitrage conditions that has opened up. And as you can see here, that in China, the interest rate is usually much higher than the US interest rate or elsewhere in the developed world. And so funds that are looking for high yield naturally looks into China. And so in 1994, in January 1994, when China pegged the yuan to the dollar, with these pegging, China stabilized the economy and also opened up the economy to foreign investment and so on and so forth. And this has kindled growth in China. But at the same time, after China joined the WTO, this does make China very inviting to foreign investors. And so we do see a large inflow in foreign capital. And as well as with China joining WTO, and China also become one of the largest trading nations. In addition, China has also run a large trade surplus. And so combining trade surplus as well as capital inflow, and China started a huge amount of foreign exchange reserves. And to purchase the foreign exchange reserves, China would have to issue more base money. And so there is this tendency for China to be inflationary, but to stabilize the economy, the central bank had to raise the bank's required reserves, and raising the required reserve ratio caused the bank then to be interested in offloading, to put the assets and liability, much of the asset liability, off their balance sheet, and that in fact fueled the shadow banking growth. As a result, I think one of the things by 2012, when the new government came in, and there was an incentive and there was also a policy directive and to rein this in and to prevent further deterioration and in the Chinese financial fragility. And so as a result, and we do see in the last 10 years, as our data recovers, a lot more volatility, and most of the volatility, I would say, is related to policy changes, and in particularly to macro and financial policy changes. Well, thank you, and I'd be very happy to hear comments and questions from the participants. Thank you very much.